You and I have talked before a little bit about why the emerging markets is such a tough place for entrepreneurs to be able to raise capital. Help paint that picture for people listening, because I think obviously for people listening here in the States or in any generally developed country where you just have raising capital, borrowing capital is relatively easy, I think they might not understand or grasp why that would be so difficult. Whether it's sharing stories or just stats, talk a little bit about why these founders and these companies have had such a challenge raising capital locally.
Well, I would say there's like three components to it at kind of like a high level economic view. One is that in a lot of these markets, the governments offer high yield government bonds. And so the banks in these markets are perfectly happy to take bank deposits and go get these bonds, and they're not as interested in lending out locally. And so businesses that have great track records and great businesses still have trouble getting loans from the local banks because those banks are happy just to get the high yield government bonds. And then also, just broadly speaking, the capital markets are relatively underdeveloped in these markets where there's just like less capital. There aren't like these vibrant sort of VC or angel networks happening in these markets. And so they usually need to look to foreign investors to get the capital that they need. And then talking to a number of other Western investors, for example, that are interested potentially investing in emerging markets, there's a couple areas. One is that they're just like less familiar with the market, so they're kind of like hesitant to jump in. Someone who's investing in the US is just like hesitant to like jump right into like Kenya or Nigeria or Indonesia. And then also there's a lot of hurdles. Like you have to really understand the local legal jurisdictions to loan and provide capital in these places, and how do you pursue legal recourse if something happens with the loan. And so it requires like a lot of work, and that's why the kinds of folks that end up providing these loans are big institutions, like really big funds, and they need to write $50 million plus checks because they have a whole group of lawyers who are understanding the legal sort of systems in these other places to make it worth their time to go in there. And so you have smaller businesses in these countries that are looking for capital, but because the local capital markets are not as well developed and the banks are more interested in the government bonds, and then the institutional investors from abroad really need to write bigger checks to make it worth all the time that they spend into doing those loans, it just becomes really difficult for them to get the capital.